weekend. I'm Epstein, and here's your weekend edition of your Spider Stock Market Wrap-Up. And this is for Friday, the 22nd of December, 2023. I want to wish all a Merry Christmas. Please, no family fights. You know, I love Christmas. I go, but I see things. I was just watching just now Fox, and they're showing a family that got out of their cars in New York on an expressway with baseball bats going at each other. I'm not making this up. I'm doing this at 10 minutes to 5. It was just it's what happens, all right? So remember, it is a time of love for everybody, but then things seem to happen. You put families together, things happen. What's been happening with us here in this market is interesting too. Trump had a win today. The Supreme Court's not going to hear the case, so that's going to put a very slow track. The courts don't want to get themselves involved in all this. And the Supreme Court, by the way, does not have to tell you when it denies a case, why it denies the case. Doesn't have any obligation to do that at all. I didn't think they wanted to get political. I didn't think they were going to help the cause in that way, and they didn't. It didn't make sense that they would. They'll let the facts roll as they will. They'll let it go through the appeals court, which will be a slow track now. And for the Trump organization, they're probably jumping that they finally got a victory of some types on some good things there. As for the marketplace, you know, we are still at this point in time where interest rates are still being debated as to how far they're going to drop. Now, I bring this up to you because I saw durable goods today up 5.4% in November. That's a big number for November. They were looking for 2%. 5.4 is double what they were looking for. Then I'm looking at new home sales, and I'm watching mortgages fall. I'm watching the home builder stocks have all taken off, and yet they're down, not up. And I'm not going to look for a very good December or January just because of the seasonality. All right? Christmas time isn't the time you're typically out there rushing to buy homes with 6.5%, 7% mortgages. Doesn't mean they won't be bought. But come the spring, a 6.5% mortgage, that might be the new norm. People are probably not understanding that the old mortgages we had of 3 and 4% recently, you don't understand how unusual that is unless you're my age and you've seen how this has all played out. That's a highly, highly unusual number. I'm going to guess 5 to 7% is probably a more realistic number. Certainly anything over 4.5 is where more norm is. So we'll see what goes on with that. Employment. We saw jobless numbers. No weakness. So let me ask you, why would the Fed make 6 rate cuts that the market's pricing in? You have an economy that's still strong. Inflation is falling. You saw today the core PCE number. It is falling. It's not galloping down. It's nicely falling, very slow, maybe too slow for the Fed, but very slow. You've got strong labor markets. Why do you have to drop rates that much is my question. So I think that somebody's going to ask it smarter than I am next year, and that some of these people might say, you know, maybe 3 is the number, not 6 that we go with, and maybe the Fed does wait out the whole first quarter. What's the rush? The economic data is still strong. That's the camp I'm still in, all right? Haven't changed my mind on that. Now, we saw some bad things happen. You see Nike stock today down 11.5%. Got to pay attention to that. I saw on Fox, they were talking about what percentage of retailer merchandise is now going on sale. 40%. That's a big number. You know, the magic number in retail is 50%. You see something half off, people just run at it like that. Even if they don't need it, they run at it and they go, I'm getting this for free. I've had my eye on something like that. I'm going to go get it. So for you Johnny-come-latelys on your Christmas gifts, I don't know that you're so late. You might do a little better right after Christmas. There's a couple of things that I want for myself that I buy myself, and I'm not buying them right now. I think I can wait a little bit. I think you're going to see prices down even further. It should get interesting as the retailers will clear their stocks. Spring, I know you're going to laugh at me. It's just becoming winter, right? The winter solstice right now. You got to start thinking spring. In the merchandise, Targets and all those stores, you're going to see come January, they'll have the cruise wear out already, and then they'll be into their spring stuff. Nike, not very good sales. I hope this doesn't affect Michael Jordan. And I mean that. I love the guy. Who doesn't if you're a Chicago basketball fan as I am? How could you not? I had the privilege to see games for years. I mean, many years. I don't know how many games, but it was, by any standard, a lot. And it was a pleasure to see. But his parents, if you ever saw that movie, that they made that phenomenal deal and guided that whole thing. And he does very, very well. What you got, $3 billion they're estimating is worth? But you can see it got hurt, so it wasn't the best Christmas day he could have had. Higher lows, higher highs still in play here. Now, what stopped the rally? I am doing my brand new charting course. Now, I looked, I don't think I've done one since 2011. It's very possible, the whole charting course. And if I'm right, and that was the last one I did, boy, that's been a while. They stand the test of time, but now I'm adding a lot to it, and I'm making it timeless. When I put up real charts, I'm not allowing you to see the name or anything, but I'm using real chart examples in areas. And then the reason for that is that in the morning subscriber videos, I reinforce everything that I teach in the course. Example, today, I recorded the chapter on the 200-day moving average of closes. You tell me you didn't get up there. It's exactly what I teach. And my concept is the first time you get up to an average that represents almost 1 year of trading. Here's what I said, just to give you an idea. I said, in a business year, a 5-day work week with normal holidays, you have about 250 to 260 business work days. Why don't we use a 250-day moving average of closes instead of a 200? We use a 50. It's popular. We have 100. They went instead to a 200. Who talks a 300, a 400? Nobody, all right? I mean, don't get me wrong. I'm sure there's somebody out there that's got all the reasons you should. I'm not in that camp at all. But when I use this average, it's because to me, it's always, believe it or not, an area to take profit and resistance on the way up. Two numbers. That's it. It's not a buy at that number. So the first challenge, if you think about it, you've just got up to an average that you haven't seen in almost a year. You don't think the pros are taking some money off there to make it prove itself, let other moving averages catch up with it? You may not believe that. I do, and I teach the logic of that. And that's just what I think is going on right now. Now, the battleground isn't quite here. It could be all the way back at 103.61, the 18-week average. When we take a look at the Bollinger Band, you got over it. What do I teach you over and over here? You don't buy over Bollinger Bands and you don't sell under Bollinger Bands because 95% of the time the market will stay within the band. That doesn't mean that if you sold it, the market won't come down and be lower. But you can generally do better as it gets back into the band if that's your same strategy. That's the point, all right? I have my own take on that, but you've got to put this together. And that's why I do the morning subscriber video, not the ones that you see when I go the morning flash news video at 8 in the morning here in YouTube. These are the subscriber ones. The ones for futures are out at 6 in the morning on YouTube, if that's where you want to watch it. They're certainly on my website and the other areas for the subscribers, but they're here. You can see on the bottom right here, I think it is, you just give it a click and you subscribe. And then I start recording at 9, the futures spider one, and it's out about 9:45, 10 o'clock. Intentional that late. A lot of reasons I explained it today in that. But you can see, so I can see that market having its resistance point. Have you stepped out of the uptrend? No. You still have the higher lows, higher highs, but you hit territory where I think the pros wanted to take money and you were overbought, not embedded. So putting that all together, I don't have a bear signal. I have a signal not to be long, the way that I would define it. In Microsoft, okay, now you start looking, are you going to embed? Embedded is when these two numbers, the red and the blue, called the K and the D in the parlance of the stochastic, when they're going sideways over 80. So you certainly had that today. You had it last week, last Friday, if you take a look at that. And the week before, you had that. And the week before, you didn't. So you now embedded. Watch, yes, right there. Week 1, 2, and here's today, week 3. So using that, do I think the pros will step in and buy? Yes. And if you get the red line to close under 79, they'll go bye-bye. Now, there's ways to do that. I teach it. I talk about it all the time in my subscriber videos. So yes, I am still very friendly this market and still looking for higher prices to come. In the banks, the regional banks, I've told my clients on a weekly basis chart, you cannot be long anymore. I said, number one, you're knocking on the door of the 200 and the 100 week moving average of closes. You're over the Bollinger Band. You're overbought. The money was made getting to the Bollinger Band, and from here, I don't know what the market wants to do. In MCHI, this is China. Now, China pulled a quickie today. China destroys everything they can do. I know you don't believe what I'm saying. I want you to think about where I'm at on this. Alibaba, a great search engine for the Chinese, created their own form of an Amazon. Do you ever go to it and look at what you do with the manufacturers and so on? It's fascinating, all right. So as soon as it got really big and they were branching into other businesses and offering ways to pay and things of that nature, the government came in to take it basically down. They didn't put Jack Ma, and I appreciate that, in jail, but he went into hiding for a year. You didn't see him or anything. Well, all out of left field, they went after the gamers last night. So Tencent, all of them, they got smashed today. Big breaks and right across the board in these stocks. And that's because the government's taking notice and they think there's too much money being spent by the Chinese consumer with his spare time, too much time on them. They're blaming the companies for giving them, if you will, hooking them on this, and it'll evolve. So they are getting hit. But that doesn't help their economies. So down and away it goes. Are we getting a bit excessive? We are. 1, 2, 3, 4, 5 weeks in a row of lower lows, and not 1 week did the market go over a prior high. In XLI, I would never tell a client to buy into that type of move. Where do you put a stop? I know you're going to tell me, take your dart and throw it. You've got the way to do it. Every now and then you get what's called vertical price moves. And when they come, this was not vertical, by the way. This at least hit the bands, pulled back, and that became very tradable because it developed an embedded reading. This did not. And you take a look at those, and here's the beauty. How many thousand different stocks and ETFs do you have to choose from that you can look at? Trying to get involved in one of those? No. But what's the market saying? Because these tell stories, these moves. It is saying that the days of the big negative in this industry is done. It's a bright side coming. And people have rushed into it over the past 2 months to get themselves in place for the new year. That's my interpretation of what the stock is doing. On the energy sector, still problems galore. We know that prices have been propped up a bit by what's going on in the Red Sea. Will the coalition be able to defend ships? Will the ships still have to go around and add another 7 to 11 days? You know, these ships, give you an idea, a tanker ship, some of these carry 600,000 barrels of oil. The big boys, they carry, 1 million barrels. You realize how big these are and what it takes to do that and move them, and how much size to the ship and the cost of it. You can't just go get these ships. I hope you realize that. Ships in the Red Sea, some of them have a short route. They come out, they don't have to go by Yemen, they go into the Suez Canal area. Pretty simple. Others are coming from another part of the sea. They got to come in and cross that. Now they got to go all the way around a different way. So look at your map. You'll get a feel. And those ships, so you'll know, what size are they? How much is the cost? It's crazy. In the dollar, I have been the ultimate bear. You know that. I did the special report. Look at how this market came apart, down 6.7%. I didn't just record that video. I recorded it a week ago, Thursday. Market's done pretty much what I was hoping it would do. In the gold market, I can tell you I'm in the camp of bullish metals. Gold is one of those. Is the market embedding? So let's take a look. Week 1, certainly both numbers over 80. Week 2, what about the week before? I'll bet it didn't. It did. So the week that it weakened was right here to the 80. Prior to that, it had an 82, and the week prior was even stronger. That's how that happened. So when you have that, there's a way to come in. It's called an embedded reading. If you haven't learned how to work with slow stochastics and Bollinger Bands, it's crucial. I created a course. Buy it for yourself for Christmas. Every now and then, don't you buy yourself a gift? Well, if you go to my website at iraepstein.com under education, do that. Do not buy the full charting course. In fact, I'm going to tell our staff to take it off. And the reason is I'm going to have a whole new one up, hopefully in January. So I don't want you to take one that's that old. The other one's there. It's still great material, but I've made it better. GDX. This is a profit-taking zone. First challenge of the 200-day average, and you're overbought from my perspective. Tesla acts like it wants to get back up to 274.5. The momentum is up. You're not in overbought territory, but you have a lower low, higher high. So it's doing one of these. It's waffling along and no more than that. Uber, this was one of these vertical runs. Remember, I had covered Uber probably a month ago, and I said, guys, they have the game down. They're in a groove. They know how to deliver food. They know how to give you ride share very effectively. They figured out how to add stops very effectively for everybody, and they can go anywhere to do this. I mean, their technology's over the top, and they're not having government problems on labor, who's a employee, who isn't, all done. Well, maybe it's time for a bit of a pullback or at least sideways action. It is embedded. So if the market has a good decline, the first reasonable decline is probably going to get bought by people that think they have missed the boat on this and want to get in. I'm probably going to stop covering DRI. I'm going to replace it and maybe a few others. We're getting a new year, and I think I'll replace them. What would you like me to cover in maybe a food business that isn't this? Because we should have one that we cover for the year. You can write me, and I'll be happy to do that. But it's got to be of size. People like to trade where there's volume and open interest, be stock afloat, outstanding. I'm so used to futures, I say open interest. Higher lows, higher highs in Google, not as a profit-taking area. No, I'm not bearish at all. But the first challenge of a Bollinger Band, it's a high probability that the market, unless it's going to break out to the upside, which is always a possibility, but it's not embedded yet. So the pros generally, from what I teach and what I've learned, that is the zone that you take some money off the table. So that's it. And by the way, here's some of the news that I watch. And one of my gifts this year, I might add some more screens, but I'll tell you, I was sitting next to Lewis in my office, and we were talking, and he said, he's got his screens, got them built up, and he said he walks out with a neck ache all the time. And I'm thinking to myself, that's probably right. I can probably put another center screen and have 3 going sideways and have everything I want. I'm always doing something. In the meantime, something I'm doing now, I want to wish you all a Merry Christmas. Be good with your family. Tune me in come Tuesday again. Thumbs up for this, I hope. And consider what I just said. If you want to subscribe here, because it's convenient for you, hit the subscribe button, as you can see on the right, if you want to see the morning subscription videos. I'm Ira. Take care. See you Tuesday.